Good afternoon, ladies and gentlemen. Hosts, thank you for the opportunity to present Northern Dynasty Minerals to you and our Pebble Project. My name is Ron Thiessen, and I'm the CEO of Northern Dynasty. So let's get to it. This is the cautionary, the forward-looking statements. I'll leave that to everybody to read at their leisure. We're going to talk about 4 subjects here today. First of all, the critical nature of the metals that Pebble Project hosts and will produce. Secondly, a little bit about Pebble, the asset itself, the resource, the significant socioeconomic benefits of Pebble to the region, the state, the nation, and then where we get to from here post NEPA permitting process. So let's get right on with it. Copper is an essential element or metal for the green economy. I mean, people are obviously aware of this. A lot of talk about the need to expand copper production significantly over the next 20 to 40 years as we transition from a fossil fuel motive economy to electrons. And electrons only transport efficiently on copper wire. So generally, it's perceived that we're going to have to increase our copper production from the roughly 23 million tons per year by at least 40% between 2030 and 2035, and probably 100% by 2050, 2060. Certainly China is leading the way in the transition to electrified transportation system, but Europe and the U.S. are on their heels. Most recently, the President of the United States has announced his new green economic deal in the transition and moving forward on that. So we all know the desperate need for increased production of copper metal, especially within the United States, to provide for a sustainable and reliable supply chain. Here's what the markets are currently looking like today and future. As I said, we produce about 23 million tons of copper. We have a market deficit this year, and that's playing itself out in the price right now. I mean, metal prices for copper have gone from roughly $275 to $450 in the last 6 to 8 months, which reflects about a 327,000 ton shortfall this year. And those shortfalls will be cumulative. We'll be moving into a structural deficit. And so that will have to be made up. You can see the demand chart in the top right on page 5 and the supply chart lower down. And by the mid part of this decade, we'll be moving into a very significant structural deficit. And well, we plan for a conversion from the transition from the fossil fuel economy to the electron-driven economy. In terms of where the U.S. will get its copper, this was a chart that was published by mining.com in the last month. The top 10 copper projects in the world. You can see their location on this chart. Pebble ranks second in there. There are 2 copper projects that are located in America, the Pebble Project and the Resolution Project of Rio and BHP. The challenge for America is that the biggest copper projects in America, Pebble, Resolution, and Rosemont, are all being constrained by permitting issues. Whereas, you know, the rest of these things, I mean, China controls roughly 30–40% of the balance of the production worldwide in copper. Pebble as a resource, page 7. I love this picture. Say, you know, picture's worth a couple thousand words at least. This isn't the quintessential view that people have of Alaska, but this is what the Pebble area of Alaska looks like. It's relatively flat with rolling hills. The valley that Pebble sits in is about 20–25 square miles in an area that itself is 40,000 to 50,000 miles. So it's a very small pinprick in a very large region. You know, in totality, it's about 10.3 billion tons, 74 million pounds of copper, and 107 million ounces of gold contained in this resource. What would Pebble in production mean for the region, for Alaska, for the communities? This is an area, Western Alaska, that has very little industrial development. In fact, the only truly commercial industrial activities are at the commercial fishery, which is roughly a 3 to 4 month seasonal industry. A little bit of sports fishing, roughly the same time, which is through July through the end of September, but it's much more modest than the commercial fishery. The reality is that commercial fishery is predominantly employs immigrant labor, not even American citizens. I believe well over 95% of the employees that work at the fisheries plants, the processing plants, come from Latin America, Central America, Eastern Europe, and Asia. So in production, Pebble will have 850 to 1,000 jobs at site and 2,000 off-site jobs. The mining industry in Alaska is a very high-paying industry at well over $100,000 a year. Our annual budgets for expenditures, not counting payroll, is about $400 million. That's basically a dollar for dollar contribution to the GDP of Alaska, and Alaska itself is in a structural deficit situation because of the fall in the oil and gas prices, but most importantly, the fall in actually the productive capacity of Alaska, because not a lot of work and additional production has been brought on the North Slope. State taxes on Pebble, roughly $50 million, $60 million a year, and over the 20 years of the initial permitted process, that'll be over $1 billion. Extremely importantly, the Lake and Penn borough that we're located in, there's about 1,800 people living in 2022 villages. Their annual budget is about $4 to $5 million. They will collect property taxes, they call them severance taxes there, of roughly $20 million a year. So that's a 4 to 5-fold increase. It's an area that has extremely low employment, and Pebble will drastically change that. We'll be able to give a job to pretty much anybody who's prepared to train for a job. It's also characterized by out-migration for people looking for jobs. And I think that Pebble will be a great contributor to the resolution of that as well. In terms of the permitting process, which we have been through, which is the National Environmental Policy Act, managed by the Army Corps of Engineers and their independent advisor, ACOM Engineering Group. The key findings related to other resources in the area, fish and wildlife, that we would not have an impact on harvest levels, that we would not have an impact on ex-vessel values for the fishery or wholesale values, that we wouldn't have a measurable effect on returning fish for either the subsistence fishery or the commercial fishery. No long-term changes to the health of commercial fisheries. No direct or indirect impacts on waters at site or in the region. And in terms of the local communities, a tremendous increase in job opportunities and year-round and seasonal employment, steady income, lower cost of living because we bring infrastructure and lower energy costs to the area. It could be a panacea for the out-migration of the local population and improve education in the area. We did receive a negative ROD post completion of the feasibility or the final environmental impact study, which was very surprising to everybody. The national interest review found that we weren't in the public interest, which was diametrically opposed to what the FEIS said. They said that we had potential impacts on commercial fishery, again, diametrically opposed. So we have appealed that decision. Our appeal has been accepted, and we'll now proceed through the appeal process, which is roughly 90 plus days to get through that, and other legal options are being considered. The state of Alaska also appealed that decision on numerous grounds. but their appeal was not accepted by the Army Corps of Engineers. At the current time, it's just the Pebble appeal that will be decided, and we'll see what the state does judicially. I want to thank you all for spending this few minutes with us, and look forward to one-on-one conversations with all of you. Thank you.